All right, well, guys, welcome. Move this out the way. All right. So today, my name is Ben Kessie, as you guys already know. Today, I'm gonna focus on investor, right? How to be a savvy agent and how you can master, right? Because a lot of our business, we focus more on, working with buyers that's looking to buy a home, and also we're working with sellers that's looking to also sell, right? We don't focus too much on our business on working with investors, right? Because working with investors, it can be very, very, very challenging, right? And you have to be trained and you have to know what you're doing to be able to work with an investor. So today I'm going to give you guys the tips, the blueprint, how you can be successful, right? Because adding investors to your business is going to be a tremendous value, right? A lot of investors, they're always looking at buying, especially depending on the type of investor that you're working with, right? So you definitely want to add an investor client or clients to your business because they are repeat business, right? Just like we say, for an average home buyer, they're willing to buy 2 to 5 properties in their lifetime, right? An investor is constantly buying, right? Some investors, they can buy, 20 properties, they can buy multiple, right? So if you add more investors to your pipeline, learning and be able to specialize on how to work with investors, you can be definitely successful, and that can add too much business to your business. So basically, we're going to focus on how to win, serve, and how you can scale with real estate investors. That's going to be our topic today. So why investors needed to specialize agent, right? And this market is constantly growing. There's a lot of opportunities right now in terms of how you can get the right deals for the investor, depending on what kind of investor that you're dealing with. So there's definitely going to be a lot of opportunities, when you work with investors. So you have to have a very, very distinct skills, right? You have to really understand how to work with investors before you can obviously close investors. So this describes understanding the mindset of an investor, right? So there are different types of investors, right? So it depends. You have to know which investor that you're serving, and you have to know what you're doing to be able to be successful. So these are just common investors. There are definitely multiple other investors that you can work with, but we're going to focus on these 3 different types, which we deal with these kind of investors doing our day-to-day business. So the fixed and flip investors, right? They're short-term investors. They're focused on profit-driven purchase price, rehab control, and resale speed, right? So the more deals you can get them on the market, you can sell it really fast, they can make a profit. You'll be very, very successful in working with these type of investors. And you have the ones that are, buy and hold. They are looking for long-term wealth, right? They don't want to sell, right? They are focused more on cash flow, appreciation, rent, stability, right? So these kind of investors, they are definitely looking for long-term growth. And you have the portfolio, right? The ones that buy in bulk, right? You have investors that, hey, you know what? I want to buy a building. I want to buy multiple properties. Some of them, they focus a lot on tax structures, how they can, reduce their taxes and, and stuff like that. So you definitely want to focus on and understand the type of investors that you are working with. So that's how you can get to the next level. And it's a very, very great niche to be in, when you are able to have multiple investors that you are always and constantly working with them. And the mindset, right? Things that you want to look for, it's all about speed and execution when you're working with investors, right? Clear and accurate numbers. Investors, they are numbers driven, right? They want to know what they're going to make, right? They want to know what kind of cash flow they're going to make. They're not worried about the emotional process, right? You can't focus on what is out there when you're working with an investors. Risk mitigation and downside protection, right? They also want to know how they can protect themselves, their asset. They want to know basically, long-term goal appreciation. And like I said, you have to understand the difference between the emotional versus the analytical decisions, right? Investors are not focused on just, what does that, kitchen looks like, right? They're looking for the dollars, how much they're going to make. So you have to understand the logic that comes into place when you work with investors. And if you don't know your numbers when you work with investors, you're always going to lose them as a client, and you're going to keep working, and you're not going to have any production. And you also have to build your confidence, right? You have to definitely know in terms of data. You have to be very, very competent when you're working with them. And it's all about understanding what your investors are looking for, because not all investors are going to be the same. All investors, some of them has different criteria, right? So you have to spend time analyzing them, speaking with them, and understanding what their investing strategy is, right? And if you know the investing strategy, and then you build on your confidence and you build on your skills, you can definitely be successful closing them, and eventually you can get more referrals from this investor. So common investor frustrations that we deal with, right? So if you don't know what you're doing, obviously slow response, right? Sometimes, lack of deal analysis, right? If you don't know how to analyze the deal, you're going to be showing an investor that wants to buy a property to fix, you're going to show them 100 properties. And guess what? You don't have no closing because you don't know what you're doing. So you got to understand how to make analysis, know how to basically, analyze the deal before you jump in the car and go in. And if you don't know how to analyze deals, again, like I said, you're going to be all over the place. But before you deal with any properties, you go out there and meet with this investor, you definitely want to know that, hey, this property, this asset that they're buying, they're going to make money. They're going to make a profit. And if it's not going to be an asset producing property, then you're going to waste your time. So you definitely want to do that as well when you're dealing with them. Overselling properties do not pencil, right? So it all comes down to knowing your numbers, right? If you don't know your numbers, right, and you are throwing numbers to these investors, they're not going to buy it. And most investors, if they're savvy, they know their numbers. And retail language instead of investing logic, right? You got to cut back on when you're out there, right? The way that you used to sell with regular buyers, retail buyers, it's not going to be the same when you're dealing with investors, right? And how you communicate, right? Investors, they don't care about chandelier, right? They don't really care about what's out there. They care about the facts, right? And the facts is all about money and profit. So you have to have a money mindset when you're dealing with the investors. And if you're not savvy enough to speak their language and know how to interact with investors, guess what? You will waste your time. I've been there and I've done that. So I know what I'm talking about. And we talk about speaking the investor language, right? Core metrics every investor agent must know, right? These are simple things that you have to know, simple languages, right? ARV, right? After repair value, right? Realistic resale value after improvement. So what it means is after repair value, if an investor is looking at a property where the value is 100,000, let's use that number, right? They want to figure out the cost, right? How much is it going to cost to repair the property if you're dealing with a fix and flip investor, right? So if they buying the property for $50,000 and it's going to cost $50,000 to fix the property, guess what? That's not a net profit right there. They're going to lose money, right? So you want to make sure that the purchase price, which is the ARV, including the repair, is basically what the numbers that I use is typically, I do, 25%. So if this investor is going to buy a property for 100,000, the value is 100,000, then you have to make sure that the repair and everything is around 25% of that. So you got to know your numbers. You got to know what you're saying. So and sometimes the properties, they are looking at it through photos, right? Some properties you don't have access to it if you're dealing with a fix and flip investor. So you have to be able to know your numbers to analyze what the repair values is going to be through photos, right? So it all comes down to experience and learning skills to be able to do that. And you also have to look at cash on cash returns, right? If the numbers are not making sense, if you have a long-term investor that wants to buy a rental property and they're not going to have any cash flow and they're going to be losing money because they have to bring more money to the table, right? That's going to be a negative net investment because they're not making money. So you have to really know what they are looking for. You have to understand what return they're going to be, and you have to know how you can explain the asset, because it's all about money with these investors. And cap rate, right? So income performance of a property. So you have to understand what a cap rate is, right? So which is the net of operating minus the value. So typically a cap rate, a very, 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 very attractive cap rate, let's say maybe 5%, 6% is very attractive to investors in terms of, long-term investment. So you got to really, really know your numbers. And also it comes down to the investor, right? You have to understand their marketing strategy in order for you to determine what asset will benefit them when you're working with them. And then, the return of value, equity spread, right? Profit. So you got to really speak like them, right? Learn the language, because you can't speak like them the way you speak with your retail buyers, right? You got to really, really know what you're doing. So if you're able to learn and get more experience and focus more on what they're looking for, you can definitely add a lot of investors into your referral group, and then you can definitely scale and you can grow your business that way, because investors, they're always buying, they're always selling. So replace feature focused description with financial outcome, right? So you got to know the numbers. It all comes down to their numbers, right? You also have to know how the spread is, right? What they are looking for in terms of what they're trying to make and the long-term investment as well. So translating market data into insight, right? What data means for them for return, not just trend, right? How pricing and inventory and days on the market affects strategy, right? So these are things that you have to know. You have to do your comps, right? You have to be able to provide value to these investors, because if they make money and they got the deal through you, they're going to be calling you every day, chasing you, right? But if you don't analyze the deal properly and you don't educate them and they don't make any profit, they're not going to call you on the next deal, because obviously it was a loss for them. So you got to really, really make sure that there's a lot of spread in investment, and you got to make sure that you have the knowledge to be able to give him that information, and that's how you can make money. And a lot of times people think that investors are cheap; they'll pay you lower commission. I work with a lot of investors that they'll pay you what your value is, right? Because they know that you can deliver. And so you think about it, you make money both ways, right? If you're dealing with fix and flip investors, you make money when they buy, you make money when they sell, and also if they want to manage the property, you can also manage the property as well. So it's a win-win for you, and you build that trust with them as well. So things to avoid, right? When you're dealing with them, you gotta say, hey, this home is a great charm, right? You can't say that with investors. Buy now before it's gone. Investors are not, like urgent, right? They don't have no urgency when they're investing, right? They want to make sure that they're getting the right deal, and they make sure they're getting it for the right price. And when they sell, they're gonna make money. So, perfect for a family. I mean, these are languages that you have to avoid when you're dealing with investors. So you got to really think like them, speak like them, and you got to be able to show them your value. And that's through you knowing what you're doing, and that's how you can get to the next level when you have multiple investors that you're dealing with. So these are things that investors, languages that they respect. At this basis, your downside is protected if the exit softens. So you got to really know how to communicate with them. This deal meets your margin only if acquisition stays below X. So you got to really know what you're doing, and you got to really be able to provide value to them. And so how do you analyze deals to make it simple, right? Because if you're dealing with investors, sometimes they send you a bunch of properties, right? So you got to really know how to, fast filtering, right? Knowing what the resale value is, especially when you're dealing with a fix and flip investor, right? So you got to really learn how to analyze multiple deals at a quickly as much as possible, right? And there's a lot of websites out there besides dealing with the MLS. There's a lot of AI softwares that you can learn, but you definitely also have to understand what you're doing to be able to analyze it there. And you have to know your numbers too, right? So if you see a property, right, that it needs just, there's difference between a full rehab and also a moderate rehab and also cosmetic, right? So before you even describe and discuss numbers with them, you have to know what are the features in a home that is selling. So if sometimes if you have to paint a cabinet, then replacing the cabinet, you can advise this investor and say, hey, you don't have to, replace this cabinet because you can maximize your value by, couple paint. You can also do that. You can also, say, hey, you know what, you may not want to replace the flooring. You can just, get the flooring refinished. That can save you a lot of money. You can advise them and say, hey, you don't have to, obviously change this appliances, right? You can just get it clean. So, and you have to know a lot about the property before you have that conversation with them, right? Because I deal with, I'm also an investor, right? So I deal with, multiple wholesaler, right? Sometimes they may send you a deal, and you may ask them simple questions like, okay, what is the value? And they will say, hey, you know what, we don't know, right? So when you're working with investors, you got to know your numbers. You got to know what you're doing. More than you have to have more information than they do, right? So every time they ask you a question, you have answers to them. So that's something to keep in mind as well. And knowing the square footage, right? Comparables, right? Knowing that, okay, knowing exactly what the subject property, has, so you'll be able to, and compare with other properties that's sold in the area or that's on the market. And you got to know what is going on with the market, right? The trend, the data, because without that information, you're not going to be able to do it. And then you can also provide a plan B, right? So if this property doesn't sell, what does that look like in rental? Let's look at other ways, where we can strategize. If your property not sell, let's look into long-term rental, short-term rental. So you can have all these conversations with them. And you also have to work with, good contractors, right? So if your investor, is a new investor, they don't have contractors, you can advise them that, hey, this is where to go. So you have to gauge the type of investor that you're working with, right? And if you're working with a lot of new investors and this is their first investment deal, you have to be able to hold their hands throughout the whole process. Because if they're making money, they'll definitely buy again, for sure. But if you make a mistake and you don't advise them properly and they end up losing money, they're gonna go away. I mean, we have this investor that we're working with. He wants to spend $30,000, and he thinks he can price it, basically significantly higher. I mean, we advise them that, hey, you don't have to spend that money. This is what you need to do to add value to the property so we can sell it. So, and he listened to advice. So, and this, right now we're gonna help him, mobilize the whole transaction. So if we didn't know what we were doing, and he said, hey, we're gonna, basically put a gold toilet in the property. And some people do that because when they're doing rehabs for the first time, they are focused more emotionally, right? They're not looking into the numbers. So this is when you come in as a savvy investor agent. You can say, hey, this is not how you do it. Work with my contractors that I trust. I'll manage this property for you. This is my management fee. Let me take care of this for you. Let me sell it, and then you make your profit. So this is all about how you deal with these investors, and understanding what their investing strategies are, and then you can provide value to them, because not all investors are the same. And also, when you're analyzing these deals, you have to understand the price range, right? Minimum return on the investment, and then the margin, right? The asset type, and then the location preferences, right? You have to know what assets that they're buying, what property that they're buying, right? You got to know all these things. If you buying something in a historic, locations, and that for this buyer they need to get a specialized permit to do certain work because it's in a historic. They can't make any enhancement to the exterior. You have to have all these information before you can advise this buyer that, hey, you know what, if you're buying this property in this historic area, this is a timeline that you have to look into. So if this is a short-term investor and they don't have any experience, and they don't even have capital to be able to maintain, especially if they have financing from a hard money, the interest that they'll be paying, that will eat up all the profit, right? So you got to know what you're doing when you're working with these investors, because if you push an investor into an historic and they have no experience, they don't have the right contractors, they're going to lose money. And once they're losing money, they're not going to call you. They're going to work with someone else. So you got to really, really know what you're doing. You got to know your numbers, what they're buying, the location, how they can get permitting if it's a long-term flip. You have to really, really have all the numbers and have all the information before you advise them that, hey, let's put in an offer on this property. So yeah, this describes everything, right? Purchase price, You have to know your scope of work, rehab, right? You have to look at photos. You have to walk into a property and say, hey, this is how much it will cost you to finish a kitchen, right? You have to know, you have to look at all the details, right, in your scope of work, and you say, you know what, this can cost you about 50,000 or 100,000, and this is the after repair value. And we have to look at where the market is going. So when you buy in it, you got to buy the property correctly and you got to buy it right, because the market is not the same. Values are changing left and right. So you have to be aware, and in terms of when you're advising these clients when they're buying these assets. And you have to have an exit strategy, right? Rental scenario, right? If their goal is to buy this property and then use it and use it as a fix and flip and sell it, and you have the property that's on the market and they need cash out of it, you have to talk about taking out equity, right? Refinance it, right? And if they don't have any income, depending on what their situation is, you can look into DSCR loans, right? Debt servicing loans, where they can take the equity out of the property, and the bank will just analyze the asset, which is a deal based on their rental capacity, and the bank will provide them with a loan. So you got to really, really be clever. You have to have the right people in your team that when you're working with investors, you can know how to structure, because everything is all about structure, right? Because not all deals are the same. Some deals you have to be able to move around. You have to be very creative to make it work for the investor, so they know that, this guy knows what he's doing. We can work with this guy. Yeah, how do you find deals, man? Deals are all over the place, man. It's you can find deals through MLS. There's a lot of deals on the MLS, right? If the property is staying on the market for a long time, it's an opportunity for you to go in there. I bought properties on the MLS for a very good price point. You can look at other listings, right? You can work with wholesalers, right? You can work with agents. There's a lot of agents that they get listings all the time, and it's an opportunity for you to buy and deliver that to your investor clients. So you got to really, really focus on, how to get these deals, right? And it's all about, you can also look at off market deals, pre-market deals, opportunities, agent relationships, pocket listing, inspire listing, with drawn properties. So they're all over the place, right? If you're looking for something, and you're working with an investor, you can connect with us. We can help you find deals. So, but yeah, it's just all about the relationship when you are working with your investor clients. Yeah, so this talks about more of finding and sourcing investor deals, right? Spotting value in any market, right? Location fundamental, right? You have to look, rental demands versus supply. How you can exit your liquidity, right? Like I said, if the money is stuck in the property and they can't sell it, you got to look at ways you can refinance it. So you have to have all these conversations before you buy the property with your clients as well, especially if they're not a savvy investor, they're new to this industry as well. And then position yourself as a deal source, right? Investors don't need door openers, right? They want to talk to you about numbers. You want to be able to speak their language, right? There are definitely a different kind of people that when you're working with them. They have a different criteria. So you have to really, really know how to communicate with them. And some of the ways that you can meet these investors is very easy, man. You can position yourself as the expert. You can do fix and flip events. You can do buy and hold events. You can do a lot of events, right? And you can invite a lot of investors, hard money, private money, capital. So these are ways you can get an investors, right? And a lot of times, man, when you meet these investors, they are looking for people like ourselves, right? A lot of agents are very intimidated to work with investors, right? Because they lack the skills and they lack the knowledge, right? But investors usually, they need us more than we need them, right? So you got to position yourself that you are the go-to person that they want to work with, and they will call you. And once they see you as the person to go to, they can even bring you more deals. And if they bring you deals and it doesn't work, you have other investors that you can sell the deals to and make profit from that. So you got to really know how to position yourself and how to deal with these investors as well. And yeah, structuring offers, right? You got to know what you're doing, right? You have to have the numbers, because if you submit an offer for an investor and they're not going to make profit, don't do it. Let them know what they're up against. So you have to really know, because you make money when you buy, right? Not when you sell, right? So if you got to be able to advise this investor to buy right, and that's the fundamentals in terms of knowing your numbers before you even advise them. And if you don't know your numbers, they're not going to buy right. And if they don't make money, guess what? They're going to work with somebody else. So, and you also have to understand when it comes to, cash versus financing, right? Cash financing, hard money is different, right? So when you're dealing with cash buyers, their profit margin is different from what you're dealing with an investor that's dealing with hard money, right? So you have to make sure that you understand what kind of financing they're using, their numbers, right? How much interest they'll be paying if, let's say, they're doing a fix and flip, right? Over the time of the loan. What is the term of the hard money loan, right? Is this a 6 month loan, or is a 12-month loan, right? And if it's a 6-month loan, is there opportunity for you to, get an extension, right? So it's important because if you're dealing with a short-term financing and 6 months and the property is not sold and you're not done with the property, then you got to look into other lenders, right, that will refinance the loan, and you got to make sure that the financing is correct, right? And if you don't have ways to advise your client and have a structure, and they lose money, they're not going to buy again. Because I know I've been there before, and I know a lot of investors that they've tried to do this and they fail, and people don't like failing, right? They don't have that mindset that, hey, you know what? If I fail, I can do it again because it's a lesson, right? So if they fail and they don't want to do it again, that's say you just lost an investor. So you got to make sure that you know what you're doing to be able to provide value to them as well. And it's all about leveraging, right? When you're dealing with these kind of deals. So yeah, how to manage investors' transaction efficiently, right? Investor expectation, right? They have a very high expectation, right? Fast updates, right? Direct communication, proactive problem solving, right? These are what the expectations investors are looking for. If they want to buy something, yes, they want you to provide value information ASAP. So you have to have a system in place, right, where you can use to provide value. If they call you for a property and say, hey, Ben, this property, I'm interested in buying the property, what is the value in, right? You got to be able to do this in like 5 to 10 minutes, right? How much they can sell this property for, how much they can make, and basically what they should be buying the property for. You got to be able to deal analyze and direct communication, right? They talk numbers with them. It's all about money with these investors. They don't care about you. They don't care about something, a fancy home. They care about how much money that they're going to make. So you got to really be cutthroat when you're dealing with them. And then you got to talk money. You got to know what you're doing. And proactive problem solver. Yeah, like I said, some deals, if you can't sell it, you got to understand how they can have a plan B, which is keep it as a rental, long-term rental, or it can be short-term rental, right? So you have to be very, very creative when you're dealing with these investors as well, in terms of ways you can communicate with them. All right. So coordinating the moving parts, right? Inspections and contractors, right? So if you're dealing with an investor, right, that is allowing you to get more involved with the process. You got to understand your value, right? So you have to charge a management fee when you're dealing with these people, because you can't just help them buy the property and now you are at the property going through managing contractors and everything like that. So and then meeting with inspectors and all that, right? So you got to really, really understand your value, right, when you start working with these investors. And when they see that you know what you're doing and you have value, whatever amount what your value is, they're not going to say no, because they know that, hey, this person knows what they're doing, right? Because you got to put yourself in that position, that you have more value to present. Because if you're going through the whole moving parts with these investors, and obviously you are devaluing yourself, then what's the point of doing this, right? So things that you have to anticipate, common issues, right? When you're dealing with, with these fix and flip, right? Things that can come up with, that can be rehab surprises, right? Sometimes they can be a damage that when the investor was rehabbing the property, they didn't know, right? So you can have something called a contingency in there, right? It can be 10% of the rehab cost, right? And these are things that you communicate with the investor when you're helping them doing your numbers, right? So you always want to have a contingency, rehab amount on there, right? If there's any surprises that comes during the rehabs, guess what? It doesn't affect their profit, right? And also appraisal gap, right? You got to know your numbers, right? And you're always looking at the market when you buy. So the market always changes. So when you get to a point where the rehab is done, sometimes you may have to price the house a little bit higher because the market has changed. Value has increased. If the value comes down, sometimes you may have to, reduce the price point based on that conversation, right? But you just have to really, really know the market, what they're buying, and you got to know what you're doing to be able to, and also title, right? You got to make sure that before they convey the property, there's no, surprises. So you got to work with the right title company, like Unico, so they can do their due diligence, right? Because let's say you're getting ready to sell and a judgment pops up out of nowhere, right? And guess what? That can eat out of their profit, right? Sometimes some sellers can be buying, probate properties, right? They can be buying, courthouse properties, right? And sometimes there are liens on those properties, right? When they buy, so they thinking that there's no lien, there's a free and clear title. They're getting ready to sell, or let's say they're going closing, and then now that you have that judgment and that lien on the property, now that just messed up the whole transaction. So you have to do your due diligence and understand the type of asset that you're buying when you're dealing with these investors, because if anything surprises comes up, it can definitely affect your relationship with these investors. And if they know that you don't know what you're doing, they're not going to work with you again. So you got to really, really protect your reputation, and you have to understand things that can come up when you're dealing with these. So you always want to have a plan to address these things when they happen, when you're dealing with these deals. And then keeping deals moving, right? Early issue detection, risk awareness without delay, paralysis, right? Yeah, so you have to, and it's an investment, right? Investments is risky, right? So it's all about having the right systems and tools in place to minimize the risk when you're dealing with these investors, right? So you want to be able to put yourself in the shoes of an investor and say, what if you are the one buying this asset, right? What does that look like? What can you do to minimize their risk when you are recommending these investors, these properties to these investors? So you got to make sure that your goal is that they make money. And when they make money, you make money. So that's how you should look at it when you're dealing with these investors as well. Yeah, so becoming long-term asset to investors, right? From agent to an advisor, right? We're a real estate advisor, right? So you have to really, really spend time, learning about investors, investing, right? You can even try and do your own investment deal, right? When you do an investment deal, you learn so much about that, right? It's like when you helping a buy a home, right? Because if you already bought a home, you'll be able to share your thoughts and share your experience with the buyer. It's the same thing. Get one of do an investment deal. It can be a rental, a long-term rental, cash on cash investment deal. It can be a fix and flip. Get your hands dirty a little bit, right? If you're able to do these kind of deals, you gain more experience and you gain more knowledge to be able to share with them. So when you're talking with them, they know that, hey, you know what, this guy knows what you do. You're not just a regular real estate agent, right? You're an investor agent. You've acquired these skills to be able to leverage and grow your business, right? So I mean, definitely, this is a very, very good way to basically build your business when you're able to add multiple investors into your pipeline. Because when you're able to help multiple investors and you become successful, it becomes a lot easier, right? It's like doing your first deal, right? Because you get more comfortable to deal with multiple investors. Anything that they throw your way, you're not going to be afraid because you have the experience. But it all comes down to, doing these kind of deals and being comfortable to be able to work with these investors as well. And, understanding portfolio level goals, right? You can have investors that want to buy a bulk of real estate, right? Because of, tax liability, right? There's a lot of, we're not tax accountant, right? So you always want to make sure that they are talking with their CPA to get the right strategy, right? There's a lot of ways that investors can, have a lot of tax benefits when they're buying multiple real estate. So sometimes you can understand some few, we're not advisors, but you can understand you got to know some minimum, knowledge that, they can gain when you're dealing with them, understanding, cost segregation, right? Appreciation, what they can depreciate when they buy these assets, right? So you can speak like them, right? And you can use yourself as as an example, you bought this property, you were able to get depreciation on your tax returns. You're not advising them on tax issues, but you're using your examples so they can know that, this guy knows what he's doing because you're speaking their language, And a lot of investors, they are very savvy. So if they sense that you don't know what you're doing, they're going to go with someone else as well. And, provide an outcome value, market intelligence, deal flow consistency. You have to have a system where it consistently sends deals to these investors. Build relationship with them, build trust, right? And that's the only way you can win when you're working with these investors. And helping investors scale, right? Repeatable systems, expansion into new asset types, right? So besides, working with, investors, fix and flip, portfolio buyers, cash on cash, long-term appreciation, you can jump into new investment, assets, right? You can deal with the developers, right? You can find them land and help them develop on the land, right? That's also another way of working with investors, developers, right? Sometimes a lot of times we're afraid to jump into these kind of assets, right? Okay, how do you find lands? How do you do this? How do you do that? What kind of zone and what can they build on? Percolation tests. These are things that you can evolve your knowledge when you start to deal with these kind of investors. You can move on to multiple investors as well. So always have room to grow and always want to expand your knowledge and expand your experience. And that's how you grow your business to the next level, because it's not always about dealing with retail buyers, because we so focused on retail buyers alone. But there's a big business with the investors, right? Because they're not buying 2 to 5 homes in their lifetime, right? They're buying multiple assets, multiple properties. So you definitely want to focus more on your knowledge and how you can scale and get to the next level with dealing with these investors. Building system for repeat business, right? Your CRM segregation, segmentation, right? How you can track your deals. Follow up, right? It's important. It's all part of the business. How to follow up with them, how you can analyze deals, right? So when you start work, my first investor deal, we were looking at so much properties, right? You can limit your time with these investors, right, by sending them the right deals, right? Because you've already, analyze their business strategy, right? So you know that this investor, this kind of asset is not going to work for them, right? But it may work for another investor. So once you understand what they're looking for, you can sell to multiple investors. And if this deal doesn't work, let's say you're dealing with a fixed and flip investor, the property is ready to go to put on the market. You have another investor that's looking for cash on cash investing, right? So you can bring them in and say, hey, man, this property is fantastic. Everything has been changed. Then at the same time, you have a long-term rental, and there's some potential cash flow in this asset. So now you put these investors together, you just close 2 deals at the same time. So that's how you should look at it when you're building your database and you're building your investment deals as well. And yeah, lifetime value on an investor client, right? One relationship can equal dozens of transactions. So this is how you should work with investors. So don't be intimidated working with investors. It's actually a lot easier to work with an investor, to work with a first-time home buyer, right? Or to work with a tenant. It's definitely very easier that way because you know what they're looking for. With a first-time home buyer, it's a very emotional process, right? They are talking to multiple people, right? So you got to be able to dissect through their mentor, what they are thinking about, right? But with investors, it's all about money. It's all about profit, right? So as long as you're able to analyze with the right asset, you can easily be able to be successful, and you can obviously multiply your business, and you can add more closing to your transactions this year. So yeah, working with investors, I think is a lot easier, in my opinion, than work with it, retail buyers as well, especially if you know what you're doing. And there's enormous amount of gains you can gain if you focus a lot on your business on dealing with these investors as well. And they're smart too, right? You're working with these people, especially if they're savvy, they're smart. They can even teach you things that you don't even know about investing as well. And that's how you broaden your horizon and your knowledge in terms of real estate as well. So yeah, just don't be one way. Don't be the one-way agent that you just focus on retail only. Add more knowledge. Be an investor as well, and grow your net worth as well. And through working with investors, you can learn more about investing as well. So yeah, so you definitely want to incorporate these kind of systems in your business and these investors, and definitely you can see tremendous success in your business. And scaling your business and investors, predictable transaction volume, right? Less lead chasing, right? You're not chasing too many leads. You're not, focusing too much on these buyers that they'll ghost you sometimes because they're afraid. The frustration is a lot less when you're dealing with investors, right? Because you know what they're after. If the deal doesn't make sense, they ain't gonna buy, especially if they're serious buyers, right? We're dealing with retail buyers. It's a lot of stressful, right? And a lot of times with the savvy investors, they understand, the entity formation, right? They have their own accountants they are working with. Sometimes they work with their own title companies. They have a system in place, right? And they respect the value of realtors. The ones that have value in investing, they respect the value of realtors. And if you come with more value, then and they know that you know what you're doing, they will give you what you want. And so more strategy focus, right? And how you balance investors and retail is time blocking, right? And service tiering. So that's the difference between investors and when you're working with retail buyers or sellers. Automation, right? And efficiency, templates, right? Deal calculators, right? There's all these tools out there. If you guys want information, I could send you some. But yeah, it's and also communication on workflow. How to communicate with them. We have systems in place that we can help you, add an investor or multiple investors into your data this year. So if you never work with any investors, or there's ones that you are, considering working with, let us know. If it's your first time working with investors, we can help you become successful with that. And also, flip resales, right? Rental portfolios and stuff like that. So these are all, ways of leveraging your deals, with listings and stuff like that, and working with these investors. So what you need to do is when you work with investors, you have to think about it, right? You have to think like the investor, like I said, right? You have to think about what they're after. And also you can execute like a professional, serve like a long-term partnership, right? So when you're dealing with investors, don't look at them as you got them ratified, closed on it, that's it. Then you just follow up with them quarterly, right? Investors, you can speak with them every day because they are looking for deals. They are looking to make profit. You can invite them to a lot of your programs that you do. They can bring multiple investors with them. They are constantly investing in real estate, right? Because they know what that means, right? So if you are able to find an investor client, you do a good job, you show them value, you can definitely increase your business and your production, as opposed to just focusing on one transaction with buyers at a time. And but because investors, they have one thing in common: it's profit and money. You're dealing with multiple buyers; they don't have anything in common. You have to understand what your buyer is looking for, right? So it's a constant shift. And it's a constant mentorship when you're dealing with retail buyers or you're dealing with sellers, right? But when you work with investors, you know what they're after, right? It's not, you know exactly because you did your due diligence to be able to figure out what they're looking for. So all you do is just provide that value with them, and then that's it. And it becomes a lot easier when you do multiple transactions with them because you know how they work, as opposed to doing, transactions with retail buyers as well. So this is pretty much this ends my presentation. But yeah, learning is better when it's shared. So basically, this is basically what you need to do to establish your lead source to go up is you have to do these transactions. You have to think like these investors. Don't think you're not. A lot of agents are intimidated by these investors, right? They are showing a bunch of properties they're looking at, and then a lot of times they don't buy. It's not like they didn't buy it because you didn't know what you're doing. And I've been there, right? I've walked through those shoes, right? But once you establish yourself as the advisor, as the expertise, and then you know what you're doing, you can limit your interactions with them, because you'll be sending them the right deals. Because if it's not the right deals, they're not gonna buy. Any questions?
Yeah, I have a question. What do you normally charge for management fees?
A management fee, it depends on, like, the deal. It's not like a percentage, right? And it depends on what you're doing, right? So let's say if you're dealing with an investor where they purchase the property, everything is done right. You have to meet with the contractor. You have to do this. You have to do that, right? And you have to look at the spread, right? And you have to look at what is after. So, typically you can just say, hey, you know what? You can pay me on an hourly, or you can do a flat fee. So you have to, it's different. So it's not like a one-time fee, right? So you have to see the value that you're going to be doing, right? Where's the property at, right? If the property is down the street from where you live, right? That's a different conversation, right? If you have to go miles, and then also you are communicating with the investors and all that, right? So it depends. Like, you have to figure out what the value is, if what you're providing with the investor, and say, hey, this is what my value is with that. When you're dealing with them. And also, it's all depends. It's not a flat. You have to quantify what your value is when you talk about management fees with them.
Like you mentioned, then the deal is when you get that property. It's all about that property you're purchasing. Right?
Correct. Yeah.
So we have talked about wholesalers. Where do we find these wholesalers? that's a question that I'm always curious about. Once in a while, we come across any how would you give as an agent who just wants to start working with an investor, what would your advice be?
Oh, okay. With the wholesalers, right?
Wholesaler, how to look for one, how should we identify, or where is the place we can find one besides the MLS?
Yeah,
what
yeah.
is your advice on that?
Do a class, networking out there, and these online websites, Market Pros, Express Home Buyers. These are like big wholesalers. Four Brothers. These are all big wholesalers, right? And it's all about networking, like you said, and meeting people, right? Because a lot of times, these wholesalers, you know, can bring you the best deals, right? And a lot of times too, when you meet these wholesalers, you can learn from them, right? And also, you can also be a wholesaler too. Some deals you can wholesale it as well, right? So if you get a very good deal, right, and you have an investor, and you can make $20,000, $30,000 out of the deal, you can say, hey, you got it from a wholesaler. This is your spread. This is how much you're gonna make as a wholesale agent, right? And then you can turn that into the investor, and they can make money from that. So some of the deals that sometimes you can make money as a wholesaler, and make money when you help them buy, and make them make money when you help them sell. Just being by middlemen, So you can definitely, capitalize on these relationships. But yeah, you have to be out there, just like how you out there meeting buyers, meeting sellers, doing open houses, and all that. So it's a big network out there. Yeah. Correct.
Those deals, be out there, communicate, connect.
Correct. Yeah. And then the more you're around it, the more you learn.
Yeah.
And then what kind of investor is serious, the right questions to ask, what they're looking for. Yeah, it's you just have to be out there. Yeah. I think somebody has a question, right?
Yeah, chat.
Okay.
And somebody's hand up also.
Maybe on the chat, all the way in the top.
Oh, okay. Hey, Mary. Yeah, what's your question?
You gotta unmute her.
Oh, I have to unmute her?
Yeah, but right next to the hand. Unmute, yeah.
Okay. Oh, okay. Hey, Mary. Man, I'm going to unmute all of them.
Yeah, I know.
Yeah.
Yeah. It's muting all of them.
Oh, yeah. I said allow to unmute themselves. Yeah.
Allow them.
Yeah. Hey, Mary.
You muted her again.
Oh, this system, yeah. Oh, okay. Hey, Mary. Hey, Mary. I don't think she can hear me.
So, this is Rick. I can read Mary's question. I think she said,
Question.
which two or three numbers do you look at first before deciding whether to purchase a deal?
Okay. She said which?
Yeah, she said, which two or three numbers do you look at first before deciding whether to purchase a deal? That's her comment here that I see.
Oh, okay. Yeah. So I mean, if you're dealing with a fix and flip, right? Is that your question, Mary? A fix and flip? Okay. So if you're dealing with a fix and flip, right, you have to understand the ARV, right? The after repair value, right? That's the first thing you do. You look at, right? And when you figure out the ARV, the next thing that you look at is the repair, right? Your scope of work, how much is going to cost to repair the property, and once you do that, then you determine what is the right offer to use to produce and make an offer. And if you do all those things, you know your ARV, you know your construction costs, your rehab costs, then you can be able to educate your clients and to make the right purchase. Because if you don't know those numbers, yeah, that's it. Did I answer your question? All right, I guess I answered a question. Yeah. So does anyone has any other questions on this?
Let's get those investors.
Let's get those investors. All right, guys. Well, thank you so much. We're gonna end our presentation, and thank you so much for coming.